Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Wednesday, the 16th of January, 2007, and we saw a return of volume to the market here again today as the selling intensified a little bit after the news from Intel motivated a little bit more selling pressure, particularly in technology stocks. But the S&P 500 did lose 93 cents, or about 2/3%. You see that increase in volume in here. And this is, exactly the opposite of what you want to see from a bullish standpoint, which is decreasing volume on the rallies and increasing volume on the declines. The big volume typically comes near short-term turning points. I'm not calling that yet. There's really no evidence, again, of any bottom at all. It is good to see that the August lows of 137 actually is the exact number we're taking out. And actually, we'd seen the lows of 2007 tested. So we did see the lows of 2007 taken out here today. And basically, anyone that bought any S&P 500 in the last year is now down in the market. So, in fact, these lows haven't been seen since about November of 2006. And we are still honing in on that longer-term objective near 135, 136. Maybe a little bit more selling we get there. We'll see. But again, clearly no evidence of any type of bottom in here in any of the time frames, really. It looked like maybe we were going to get a little bit of a recovery after the market recaptured this level that it had broken past earlier in the morning. That is the lows from last week. Looked like maybe it was going to try and hold. We did get a higher high, but then we had a lower low in here as well. So if we look at the daily, the one-day time frame with the VWAP, you can see just a real choppy mess in here. Just a real day trader's environment. There's really, even on the short side, these stocks can rally very quickly. Unless your time frame is much longer than that, is in the weeks or so, and you don't mind the volatility, then short is the way to go in here with your longer term plays. But meanwhile, on a day trading perspective, there's continues to be excellent opportunities long and short in here. Yesterday I said that looked like look for the potential of a test of these lows from August, and we did get that. So it continues to be just a very choppy, downtrending environment, and that's pretty characteristic of a bear market, which is, we get these sudden and sharp rallies. They increase a lot of people's confidence temporarily, and then people just start throwing their stocks away as those rallies diminish. So just continue to be very careful. The semiconductors were actually up today. The semiconductor index, the SOX that is, did get down to 345 or so. So it took out those lows from 2004. And then we saw a little bit of buying come into this group. Now, Intel didn't lead that. I'm not sure exactly what it was. I don't feel like looking into it. But again, when these stocks are in downtrends, and if you're going to bet on them, bet on the direction of the trend. This Intel, there's no reason to be buying this stock when they gap lower like this. It's no different than the gaps that we saw in some of the stronger stocks on the uptrends. That you don't want to fade these gaps when these stocks gap higher, like ISRG did right here, or when Amazon did, back in these areas. You don't want to be fading those gaps. And right now, the Intel is in need of a lot of time to heal it. There's no hurry to rush in. Even if you're an investor, there's no hurry to get involved in Intel. The semiconductors, maybe they're going to find some support in here, but still zero evidence of a bottom on any time frame. Right now, we've got a little bit of short-term level of importance at about 366. So getting above that, maybe we get a little bit of a lift in these. But if you're going to play for that, just consider it a very aggressive trading bounce, nothing more than that. The IWM, the Russell 2000, did test, it came close to testing these lows right in here. In fact, let's take a look and see. Let's take a look at the 30-minute time frame. But this low right here last week was 68.62, it looks like. And today's low was about 68.72. So it made a higher low in here. Starting to stabilize a little bit, but as we've seen in the other markets, a consolidation in a downtrend will typically resolve itself in the direction of the primary trend, which is lower. So continue to be on high alert here. There is a possibility that the market could turn higher, but odds are against it. The market continues to be very oversold in here, but you saw this bounce, how quickly that failed. And now, again, increased volume here today. But this market actually closed with a gain of 3 cents. So it is showing a little bit more relative strength than the other markets, but continues to be very much dominated by the sellers. Above 71, maybe we get a move up towards that 73 level, but really the more important level is this 68.50, 68.60. Breaking below that level could lead to further decline. I said I'd monitor this, and it looks like we do have a divergence in here. Although we didn't get a lower low in here today. It would be nice to see a lower low. These MACD divergences often come near turning points. Again, there's nothing on these time frames that suggests the buyers are regaining control. Look again how the sellers came in right at the end of the day to this market and killed the hopes of any bullish participants in there who thought this market was going to be able to hold on to getting back above that 70 level. And 70 is continues to be a key level here. So we've got options expiration on Friday. Maybe they're going to stick it right around there. We'll see. But the NASDAQ 100 did finish with a loss of 1%. They were down 50 cents. And, just another lower low in here on the daily time frame. It's looking a lot more like maybe this market's heading down towards that 44.5, 45 level, the lows from 2007 in there. There's, again, zero evidence of a bottom in here, and these markets, in the stocks that are the big components, continue to just get, they look like they might be able to recover a little bit, but then they just get completely annihilated, and we'll take a look at that in a moment. But intraday, I was saying that 46.50 was a key level for this market. It looked like maybe it was going to hold above there, but again, with a declining 5-day moving average, it's just an area to watch. It's not an area to take action. We did have a higher high at that point, and it was these prior lows, so it had the potential to trap the sellers. But again, late day, we saw that selling pressure come in real strong in here. Look at, for instance, Apple. How Apple, at the end of the day, Apple looked like maybe it was going to recover a little bit in here. Well, where's my chart? Here we go. As it rallied above that daily VWAP. And again, these are great day trading opportunities. We get these 3-point moves in the period of an hour or so. But you have to be very aggressive. You have to be very disciplined and used to the volatility and trading small enough share size that your emotions don't become triggered into making you execute a poor trade, because when emotions enter the picture, a lot of sloppy trades tend to get made.